have the misconception that data is broadcast everywhere to every member. Different types of blockchain technologies have evolved. We have enterprise blockchain solutions now where only the people involved in a contract actually have a copy of the data. Now, when we start to bring people onto these blockchain networks, it starts to develop a new kind of ecosystem, and we can start to create ecosystem applications. So if you imagine it like everyone has an iPad, and iPad is your blockchain. Now, an iPad's no use on its own without any applications. So what we're seeing is the insurance applications that are built on blockchain are like apps on an iPad, where your iPad is holding all of your own personal data. So if I want to trade with someone, I just have to make sure they're running the same application as me and I'm connected on the same blockchain. There's lots in the press today about parametric insurance. So parametric insurance-based smart contracts will allow external sources to trigger events on insurance contracts. An example of this could be crop insurance in a low-income region, where farmers rely on the weather to be successful. When certain criteria have been met by a trusted source, for example, the low rainfall in August and September, the contract can automatically pay out all the farmers so they can continue to support their family. And this can also be extended down the chain for the reinsurance aspect of the primary insurance. Linking insurance and reinsurance to real-time data will allow more flexible products to be created based on the insured actual needs as opposed to blanket coverage. As a container ship moves from port to port, the risk profile changes constantly. Linking this with sensors and IoT with the changes of location, we can start to see the insurance can be automatically updated, smart policies increasing, decreasing the coverage types, increasing and decreasing the premium. By default, blockchain technologies provide the audit history and the sharing of data. When it comes to regulation and reporting, new models can start to emerge, where we have regulators and grant them real-time access to data based on permissions from the parties. Remember, you still own your data. So this can allow regulators to monitor in real time, for example, the solvency of companies. They can use predictive analytics and AI to start to flag potential issues that are coming up in the future for these companies. They can provide services like tax calculations on smart contracts. And if the regulator wants to apply new rules to smart contracts, this can be enforced in near real time.